we're going to talk expenses, and Chase is going to take us through that. The plan is to do that for the first 35-40 minutes of this, and then I'm going to talk about some new things that are coming in the product afterwards. Did I miss anything, Chase, or are we ready to go?
I think we're about ready. I did want to take a second though. We've had quite a few people join over the last couple of months that we've held this, and so just as a quick refresher for anybody new, the focus of these is really doing a deep dive into the product. So each month we focus on a different, maybe a workflow or a series of features that work together, so that we can, one, highlight some of the cool things that Fred and the engineering team have brought to us, but also making sure and doing a little bit of education on some of the bigger picture workflows. Or so, for example, expenses. It could be as simple as just adding an expense on the expenses page, but there's a whole lot more that you can choose to do. And so we wanted to, kind of showcase that, and then, walk through some of the technicalities. A lot of the folks on this monthly webinar, bring some really great questions, and that helps inspire other users and other firms, but also us. And sometimes we get asked questions that we don't know the answer to, and so that leads to some interesting conversations and product choices. So that's why we're here.
Well said.
Cool. All right. And with that, I'll go ahead and get started with my shtick on expenses as this month's focus. Go ahead and share my screen here.
And we are recording this. So if you need to drop off, or if you think this is useful for a colleague, you can revisit it later.
Yep, we'll send out a recording and an email probably in the middle of next week, probably about Wednesday a week from now, with that recording. So cool. So we're going to start something pretty simple, actually, is just the regular expenses page. So I'm sure most of you are already familiar with this in LeanLaw. The expenses tab up top. There we go. Kind of the home base for creating expenses. And I do want to quickly say, when we refer to expenses, we're talking about prepaid expenses. And there's a bunch of names: advanced client costs, prepaid expenses, infinite number of options there. But the gist is, it's something that the firm pays on behalf of the client and then is expecting to be repaid for. So when we say expense, that's what we're talking about. Quick walkthrough of the page here. We've got filters on the left, our client matter, so on and so forth. Two interesting ones here, actually. The expense type. So for any expenses synced in from Quickbooks, we can filter based on the type of expense that is, whether it's a check, a bill, journal entry. That's a new one. And then beneath that are the billed. So if we wanted to exclusively look at expenses that had already been billed, or look at ones that hadn't been billed, you now have the ability to filter those. I know the billed one's not new, but it is something that I'm constantly excited to see. Cool. That's filters. In the middle here, we've got the list of expenses we've already created. And then the big green button for create expenses. We'll go ahead and click that. Very similar to time entry, we pick our client, matter, date, give that a description and an amount. Some of our more savvy users might know about the expense templates. So when you go through and fill some of this out, say hello there, you have the option to save this as a template. So if you end up recording a lot of the same expenses, you can save it. That way, for future use, you can just quickly pull that out and not have to repeat all of that information. There we go. Normally that'll appear as a drop-down. So that's the expenses page. Again, pretty basic, but also kind of the home base. If we wanted to get a little more technical, which we're absolutely going to do, we'll talk about the sync of expenses. And actually, Fred, I probably should first describe the difference between soft and hard expenses, because that's going to be important here.
Yeah, I can cover that. So yeah, the expenses tab is where we're starting. Now, when you create an expense from in here, it creates something that can go on an invoice. We normally call it a soft expense. It does not have an outgoing component. Like it's not accounting wise, it's just a line item on an invoice. We also have this notion of hard expenses, which is expenses that you have paid on a credit card, or there's a bill, or something happens in your accounting system that you want to pass on to the client as a hard expense. And those, the primary sort of feature that you might not be aware of, that we want to make sure that you're aware of here, that's not obvious, is our ability to sync those expenses in from QuickBooks and all that follows there. So you create expenses from in here in LeanLaw that goes on invoices, but you can also sync them in from QuickBooks, and that's what Chase will show now, I think.
Yep. So the distinction there, like Fred was saying, soft costs are tracked in an income account, and those hard costs are tracked in asset accounts over in QuickBooks. So let's take a look at what, because LeanLaw has the ability to sync in expenses from QuickBooks. So that's what I'm going to show now. So we're up here in settings, and then QuickBooks at the very bottom on the left. There we go. Now, if you're setting up your QuickBooks for the first time, the windows we're about to see are part of that process. But if we're going back and changing it later or setting up afterwards, say we skip those steps, you'll click this Edit Expense Settings button, and that'll give us the same dialog. There we go. So I've already gotten this set up actually, but we're going to do the walkthrough again. Something that is important to note here is the checkbox for include vendor/payee names in the description. We had a request from a firm that wanted to include that automatically so that they could keep track of that. Some of the larger clients. That just takes the vendor or payee name from the QuickBooks expense, puts it on the line item or the description for that line item. So question here, how do you upload scanned copies of receipts or proof of the expense when a client requires that to be included as part of the expense? Fred?
Yeah, this is a great question, and it is at the very top of our list of feature requests from several of you as it relates to expenses. It's not something we can currently do, unfortunately, but we're very aware that this is a hot topic for many of you. You cannot currently include or upload expense receipts from LeanLaw. You can attach expense receipts in QuickBooks or with other tools like Expensify. So you can use other tools that way, but there's no way to sort of automatically have them flow down to the invoice that LeanLaw creates for clients. And it's a known gap that we have. I'll be perfectly honest that's not something we can do today, but we would like to enable here soon.
Soon would be nice. All right, so we're back in the wizard, and it's the setup wizard, and it's going to walk us through a couple of questions here. So I'm going to go ahead and explain that. The first question it asks us is, do we want to enable the QuickBooks sync? Basically, do we want to sync expenses from QuickBooks into LeanLaw? If we select no, we skip these next couple of steps and just set up the LeanLaw part. We're going to select yes and set up both sides. Okay, so as I previously mentioned, we need to have an asset account for those hard costs, and that's what LeanLaw is asking us here. If we already have one created, we can select it from this dropdown. And if not, we can click the Create a New Account checkbox at the bottom, and that will just fill in for us that name. I'm just going to do that same one again. Next. So next up is creating a product or service for that. So when we put that line item on the invoice itself, it has an associated product. Same thing with that checkbox. Go ahead and do that.
That's a question of whether it has to be an asset account, and the answer is no. We recommend, or as far as we're not accountants, we work with accountants, and as far as we understand, it is best practice to use an asset account here, but you can use an expense account, and maybe it's just as valid. So.
Any accounting experts in the chat, please feel free to chime in and help answer that if we missed something there. Okay. Next question, step 4, is picking the date range that we want to sync in. So the default is sync all dates. Say we only wanted to sync in beginning of this year, say we're migrating in and we've already accounted for everything in years previous. We can set a different start date. So anything after the 1st of January of this year would sync in. Generally, we suggest doing sync all dates, especially if it's a newer firm. That way you don't miss anything that gets backdated. Next. All right, so if we had clicked no and we weren't syncing in QuickBooks expenses, this is the first thing we would see. And it's asking us if we differentiate between, or if we want to use the same account or a different account for those hard and soft costs. So do we want to use a different account or do we want to use the same account? We're going to go ahead and set different. And I believe different is actually what we've heard is the recommended best practice on that, Fred.
Oh yeah, absolutely. For various accounting reasons, you want this. You need to have a very good reason to pick same here. But we're getting into some accounting territory that we could discuss in more depth, but we probably should keep it at this level.
Okay. Go different. And so now we're setting up that income account for those soft costs we create in LeanLaw. I've already named mine billable expense from LeanLaw because that's easier to keep track of in my head. And when I go check the chart of accounts, we'll do next. And same again with that product and service. So I'm not going to save changes because I already have this set up. Go ahead and cancel.
Yeah, so if you're not an accountant, maybe I should just mention because of some example, maybe it's probably confusing this distinction here. But just as an example, I might have maybe I have some mileage expenses. I'm driving somewhere, I come back and I want to pass on some mileage expenses for a client. That's soft cost because there's no outgoing component. I'm not gonna take a payment I've made to the gas station and pass it on to the client. I'm estimating a cost. And it becomes, accounting wise, it becomes income. I'm basically charging, X dollars per mile onto the client, and it's accounted for as billable expense income. The difference is, for example, a filing fee where I pay with the company's money, a filing fee that has an outgoing component. We're billing it onto the client. And now we have an outgoing and an incoming component. That's the hard cost example. I'm sure what I just said is trivial to the accountants among you, but I just wanted to kind of add that flavor for those of us who need kind of a good example of the distinction here.
Excellent example. Thank you. All right. We've covered syncing in those expenses from QuickBooks. Let's actually try and do it. So we'll pop over to QuickBooks here. And there's actually a couple of things I want to cover, just some housekeeping things before we do this. Because there's 2 settings that are kind of important for the upcoming steps. So I'm going to go up to my settings in QuickBooks here, and then account and settings. And then expenses on the left. Cool. So there's 2 things here I want to talk about. One, the make expenses and items billable. LeanLaw wants that to be turned off. And the second is the track expenses and items by client. That allows you to, when creating that expense in QuickBooks, to say, hey, I want to assign this expense to Chase. If you don't have this enabled, you'll have to manually assign it once it gets picked up in LeanLaw. And we'll cover that in just a moment. So Fred, why don't we want expenses to be billable?
Well, so the billable, this option here is a built-in option in QuickBooks that allow you to mark things as billable or not billable, and then automatically add things to invoices. The problem is that QuickBooks doesn't allow apps like ours to use this feature when we create invoices. So we basically, and also there's some other issues with this. We're basically using an account approach to marking billable expenses. Whenever you want something to be considered billable onto a client, put it in that expense account called prepaid expenses. In this example, you might call it something else, but assigning it to that account is basically indicating that it's a billable expense, like Chase will show now. And any expenses that we have outgoing will debit that account, and any expenses that we recoup from invoicing will credit the account. Or is it the other way around? It will increase the account and decrease it. So that's you want to make sure this is off, or we'll start getting issues with QuickBooks built-in mechanism for billable expenses and the way we recommend doing it. Sorry, that was a long answer.
The short answer is it causes more problems for your accountant, staff, and LeanLaw. So just turn it off. It's much easier for everyone. Okay, let's actually create an expense now. Go ahead, go new, and create an expense. I do want to note, actually, so long as you follow these same steps, you can create this item as a bill, an expense, a check, or newly a journal entry. You're just going to follow the same steps with categorizing. We'll start with an expense because that's what we're talking about. So the most important thing about syncing an expense from QuickBooks to LeanLaw is the category that you set on that expense. So previously, you might remember we selected that category of prepaid expenses in QuickBooks. That's the same thing we need to set here. We need to say, hey, assign this expense to this asset account. So we'll start by doing that. There we go, prepaid expenses from QuickBooks Online. We'll say hello for that description, give that an amount. Actually, you know what? We will do transit costs. That's more realistic. And you might remember that other flipper that we were just talking about that track clients on billable items or on expenses. That enables this column here. So this, when LeanLaw picks up this expense, it will already know, oh, this is the client and or matter that this expense needs to be associated with. So I'm going to do that now. We'll do last month tomorrow. And you'll notice it's picking up on that client matter structure or the account sub-account structure. If we don't set the matter, we'll have to manually sign it in LeanLaw. So I'm going to intentionally not pick the matter here so we can take a look at what happens. There we go. Got the essentials, got the category, description, amount, and client. And we'll go ahead and save and close that. So that's been saved. LeanLaw is now aware that that expense is something it needs to pay attention to. Oh, hey, it already pulled it in. Look at that. So here's that $100 transit cost I just created. So it's pulled in those same details from QuickBooks. I'm going to create another one over in QuickBooks real quick to show what happens if we don't have that client and matter account selected.
And just as a side note there, Chase, you can fill this in here. If you don't pick the matter, we will pick it automatically if there's just one of them. That's what happened just now. So you might have different scenarios here. When an expense is created in QuickBooks, it might be done by a billing person that doesn't know exactly which client to pass this expense on to, but maybe you do know. So depending on your workflow, you can either set the client or not. But in here, you would basically decide, hey, this needs to be passed on to a client. So we assign it to that prepaid expense account. And then if you do know the client in here, you'll assign it. And if you don't, it's fine. Then Chase will show how to assign that in over in LeanLaw.
Precisely. So I'm going to save this. You'll notice I didn't select that client. I didn't set anything. But LeanLaw still knows we want to sync this expense in. There we go. So now there's that Manila notification at the top saying, hey, we've got one unassigned expense in QuickBooks. So we can click Assign Expenses and then click on that item. So like Fred was saying, maybe we have a billing staff in QuickBooks who doesn't know who the client or matter is necessarily, but they know this is something we're passing along to clients. So then whomever is working on the LeanLaw side, and it might be the same person or the attorney, can pop in and assign who those or who the client and matter are for that expense. So just like if we were creating a new expense, we'll select our client and matter. We can select that user for allocation purposes and then save. So now we'll see that expense here. So that has been assigned because we didn't set that client in QuickBooks. Okay. Fred, did I miss anything on syncing expenses? I know there's some accounting.
No, I think we can just kind of summarize here. I mean, the expenses come in here and then they're ready for invoicing. And so we can now, next time we create invoices, these are now teed up for the monthly or whatever invoicing for that client.
Mm-hmm.
Now, that's when, so if we go to QuickBooks and look at the prepaid expense account, when we created the
accounts.
What's that? Sorry?
In our chart of accounts.
Yeah. Then we will see those prepaid expenses in this account will increase whenever we create an expense and put it in here. Now, once we invoice it, it will decrease this account. And so you ultimately, the balance of this account is essentially prepaid expenses we haven't billed yet. And ideally should end up as zero if you have billed on all your expenses. That's kind of the beauty of this approach. But I guess that's again into the accounting weeds of things maybe. So if it's not clear to you this mechanism and the accounting pieces, talk to your accountant about enabling this and the specifics of how you should do it. Now, the other thing I want to add is that you can kind of sense that there's some workflows here that if you do it a certain way in a certain sequence, it's all going to be great. But if you don't, like we talked about how, where do you assign the client? Well, it depends on your firm when you want to do this. So I would encourage you to really be very clear about who does what in terms of expenses coming in, how they're invoiced, who's assigning them, et cetera, et cetera. So hopefully you already have some good processes there, but LeanLaw has some opinions about how you should do it, but in general, you have to kind of figure out what works for you, obviously. While you're in QuickBooks here, Chase, somebody wanted to get a reminder of what options we were setting when you started out.
Yeah. So settings, accountant settings. And then there's an option on the left here for expenses. And the two that we talked about earlier were track expenses and items by client. We want that enabled. And then make expenses and items billable. We want that disabled.
And one note here is that you might, if these options are not available, like you go to this page and you don't see these checkboxes, it's because of your QuickBooks version. There are some, I don't remember exactly which ones they're available for or not, but the very entry level, the cheapest QuickBooks, I don't think have this option in here. You can still use the syncing option that we have talked about. You just can't assign the client name in QuickBooks, but you can still use this option and then assign the client name over in the LeanLaw. Just FYI.
Got a question of when that excuse me, with those expenses, is that asset account decreased when it's invoiced or when it is paid?
It's when it's invoiced.
Okay.
So when it goes on an invoice, it references a product service that references that same account. And so when you put it on an invoice, it becomes AR and it decreases that account. So it doesn't actually tell you whether you got paid, that invoice was paid directly in there. So got some other questions coming in. Well, so there's a question about the billable checkbox again that we sort of tried to explain this earlier. It became a little bit of a rambling from me. Let's just briefly mention that again. If you have the billable option on in QuickBooks, you get this checkbox for expenses that you can check to make something billable. What this does is if you open an invoice for a client that in QuickBooks, it allows you to add those expenses to that invoice from QuickBooks. And so you get into, and there's also some reporting features and so on. Now that's QuickBooks' way of automating invoice creation with billable expenses. But if you're using LeanLaw, you really should be creating invoices. That's the whole point of LeanLaw. It's to create the invoices from LeanLaw, and so you run the risk of accidentally adding billable expenses to invoices created from LeanLaw by using this checkbox. Again, I feel like I'm rambling here. I'd like to follow up if it's not clear to Katie was asking this question or anybody else. I'm struggling explaining this as well, I think, but feel free to follow up.
Yeah, I'll real quick. I just enabled it to show what happens really quick with that enabled. So with that, oh my goodness, when that expense is put on an invoice, that asset account is decreased, right? So your accounting is resolved. If you have it enabled still, if you have that checkbox enabled, QuickBooks does not remove that expense from the client's account. And so you end up basically with duplicates of, I guess I don't have that. You end up with duplicates, and then that causes problems where even though the asset account has been decreased, there's still an expense listed. Yeah. And so it snowballs into this giant, why is my account balance wildly off?
I think we have to move on for this question, Chase. If you think you have a reason that you need this on, happy to talk to you further about why we don't think it's a good idea, or maybe if you do have a reason to switch it on, we can discuss if there's some implications there. So there's also a question about why do we not sync Expensify expenses to LeanLaw? Well, we do sync them if they're assigned to the right account. If you and we can follow up here. Maybe something isn't working correctly, but if you have Expensify configured to sync expenses into QuickBooks to that same account that we just discussed, they should sync onto LeanLaw. If that doesn't work, I'm happy to follow up. So let me know. Now the other question here, Chase, that I wanted to add is that you can have sub accounts under expenses. Under this prepaid expense account or whatever you call it, and they should also sync in. So you can organize your expenses still in different categories as sub account under this, and they'll still sync in correctly. There's some subtleties there that I won't get into, but all right, Chase. I think let's move on to whatever is next.
Yeah, whatever's on the agenda, we can just skip right to that. As Fred said, I briefly touched on it with invoicing expenses. It's just as easy as invoicing time. You go through that invoice creation process. There's a specific column for your expenses, and they're included just like every other type of item. That way you don't have to manually add that to the invoice later in QuickBooks. You don't have to worry about accounting for it separately. LeanLaw is handling all of that for you automatically. So the idea is, bring as many of those workflows and, 1-2 things to do into one. That way, invoicing is just as easy and streamlined as possible. So after we've invoiced, after we've gotten paid, we probably want to look at some reporting, and there's two specific reports that I do want to talk about. They're both contingency. So you'll want to make sure that, when you're trying to run this on your own LeanLaw account, that you're making sure these are contingency matters. And real briefly, actually, other reports like billing and revenue still have columns for expenses. They're just not, dependent on expenses. They're not based around expenses, but they do show that data. So the two reports I want to talk about are the contingency statement and the expense period report. Start with that expense period report. So this is a period report, so it is showing values of expenses over different periods of time. So I've got this set up right now to show me the time period in years. You can adjust that filter on the left. We'll do last 12 months. So we can see the totals I have for this client in February, in March, April. Pretty handy for the firms that do a lot of contingency work and want to see, excuse me, how much they're spending on clients per month. And the other report here is the contingency statement. There we go. So you'll see that does have a separate column for expenses. The difference here, though, is a lot of contingency cases actually, and again, depends on the firm. A lot of firms that run contingency will actually will charge interest on expenses, which, based on these two reports, we might want to toggle on and off. So we'll actually take a look at that now, is turning on expense interest. So before we do that, actually, I'm going to keep a tab of this open so we can see what that interest actually changes to compare. So we'll go ahead and open up our settings here. And then do billing under the billing workflow option on the left under firm setup. So you will want to make sure you have access to this before. There's an option here at the very bottom for interest on expenses. So this is a firm-wide option. So we'll do 5%. Save changes. Now, like a lot of things in LeanLaw, after we set it up at the firm level, we also need to set it at the matter level. So let's go do that. So we've set it here at the firm level for 5%. Now we're going to toggle that for our contingency matter here. There we go. It is in billing and rates at the top. And now there's a little flipper here for interest, expense interest. Yes. So we want that 5% we set earlier to be applied to this specific matter. We'll save changes. Now let's run that report again and see what's changed. Fred, right before my eyes, those reports actually just disappeared.
Use the chat button to get some help, maybe. Those reports should appear if you have contingency cases defined. Maybe refresh that page. That I'm not quite sure what's going on.
We'll just rerun that same report. There we go. We'll go ahead and open that. So now we see that 5% interest here. So previously we didn't, but there is now a column specifically for that interest. And we can pop this open to show, say, this entire year, so we can see how that applies to all of the expenses we have listed.
All right. Well, this definitely inspired some questions from the crowd. So let's talk through a couple of these things. So yes, from Katie, you turn the expense interest feature on for the firm as a whole initially, and then under each matter where you do want to apply expenses, you switch it on and off. And there's only one, you can't change the interest per matter. That might be something you'd like to do. Let us know if that's an issue, and we can consider maybe allowing you to override it in here. But the way it is today, there's one interest for the firm as a whole, and you decide whether to apply it here or not. And so another question is there an option to add interest to AR? Now, this is the short answer is no. It's totally unrelated to expenses, I guess, but I totally understand the question that you'd want to basically have late fees and interest on clients that don't pay on time. We don't have any built-in features for that. I think, Chase, is there a third-party tool or QuickBooks feature that for this? I recall that this is an experimental feature by QuickBooks that we've actually that can be enabled in your QuickBooks account if you ask into it nicely. And I think we were able to help a couple of firms with this. This is a while ago, and it might be a general feature now available for everyone. I'm actually not sure. But it's not a LeanLaw feature. So if you need to add interest on AR, you would have to look at QuickBooks or maybe other third-party tools for QuickBooks. So let's see, what other questions do we have? So the interest that Chase showed is the question from Ian here. Is it simple or compound interest? It is simple interest based on the date on today. Basically the difference between today's date and the expense date, and it's calculated as a the number of days between today's date and the expense date, and then applying that interest proportionally. And you cannot, it's actually a feature request we have open, you cannot set the date for this. It makes sense to be able to control which date you set as a starting point for this report here. But you can't control the date. I think it's the, I might have said something wrong there. I think it's the last day of the time period you picked. Actually, I'll have to follow up with you on that. I'm sorry, I'm not sure now which date we use. I think it's the last day of the time period picked in the report. Sorry, I might have misled you there first. Okay. There was a, let's see, what other questions do we have?
The question, how did you get to the page to make the recent changes for interest? There's two of them I'll quickly cover again. So the first was going to the settings, unsaved changes, thank you. So settings in LeanLaw, and then billing / or the billing option within settings. And then at the bottom, there's an interest on expenses option. So you set it at the firm level first, and then second, you set it at the matter level. So if you open up a matter, then under the billing and rates tab of a matter, there is the flipper for expense interest. You have to enable both of those.
Then there's a question, I think we might have lost the context for this question. Katie asked, do those expenses stay regardless of whether they've been paid yet or not? And I'm not totally sure what we're referring to here.
I think she asked while we were looking at those reports. Yep,
oh,
on the contingency reports.
The answer is that you can control, you can choose. If you see down on the left there, there's the not billed all filter. So by default, it's all the not billed ones that are shown. So this is the intention with this report is that you have a bunch of contingency cases and you want to look at sort of the risk building up, the costs, hours, expenses, etc. That's the idea here. There's also another little subtlety here, which when you click into one of these reports here for a client, we have a feature up at the top, and some of the reports have this where we say print for client. So the idea with this is to give the client or somebody external like a reasonably nice looking statement that summarizes the open cost of disbursements or expenses associated with this case. Some of our reports have this print for client feature, which creates that header up on top, which is basically comes from your QuickBooks information. So that can then be printed out and or emailed to the client. So I think that's all the open questions we had, apart from somebody pointing out that the LeanLaw crashed, which we're sorry to say. Maybe everybody is overwhelming us with looking at these wonderful reports. Hopefully that'll calm down here shortly. Let us know if that persists.
And if not, I will be back in support at the top of the hour, and
right.
we can have a lovely conversation to figure that out.
All right.
Fred.
Okay, Chase. I think we might have covered more or less what we need to cover. Is that true? It's a little bit of a whirlwind here, but.
So that's all I've got for expenses, but I understand you've got some features.
Yeah, I mean we have some time here. I don't think we need to take the full hour here, but
we get to leave
just
early.
to kind of wrap up on expenses. I think if I mean you're at different stages in your use of LeanLaw. Maybe you just started out. Maybe you used us for years, and so, we're not quite sure what of this might apply to you, but I think, I'm hoping to get across here that the most important thing we wanted to get across was the expense sync feature, which if you're not aware of it, we will strongly recommend you look into that and use it. It's very, well, the clients that use it love it. So if you're not using that, I would recommend that you look into that. And then I guess we showed some other aspects here that are hopefully some of it was something you weren't aware of and you can use. And anyway, let us know if there's something you missed or if there's other questions you have, just using our chat button there at the bottom if you need more help. Okay, so I was going to share a little bit of what's next, as we've been doing with these sessions. The first thing maybe I can ask you to drive this first one, Chase, since we have your screen open. We have a new feature called Allocation Detail. That's really handy if you go to the revenue report and drill into. Oh, I guess not.
Nope. I actually broke something and forgot to tell you. So we actually can't use mine for this report. But there's a backup. We will pull up the sales demo account.
Okay. Yeah, we sometimes break our own accounts here. So when we've talked before about our revenue by attorney report and how let's click into Frederick Taylor down there. That we're able to take payments and distribute them out to individual users based on what they've worked for an invoice and origination and all this stuff. So let's pick Greg, the 5012. So here's an example of a payment made that rolls up to this report. A payment made for $429, and this attorney worked on the invoice, and there's some origination, and they end up getting that amount 386.32 out of that full payment amount. And I think we've had a lot of challenges with with you not understanding why these amounts are the way they are. So we added under the triple dot menu a really powerful feature called Allocation Detail, where if you go in here and pick this, we will basically tell you the full breakdown of how this revenue was allocated. So you're seeing there at the top the how much that particular attorney worked, the share they got, and they got apparently some origination. There's a referral component to some other attorney called FL, and then there's a firm share, and then it all adds up, and you can see, okay, it's because that guy was a referral. Now, maybe you're not aware of all these features with origination and referral and firm share, but we can talk maybe some other time about that. But if you are using this report, the revenue allocation reports, this is really handy for understanding why we allocated something a certain way. So wanted to flag that. It gets also more complicated if you have partial payments or multiple payments for different periods. We then allocate a certain portion a certain way for the first payment, and it gets very difficult to figure out yourself how it's all allocated according to these formulas. So wanted to highlight that feature. Thank you, Chase.
It's basically a cheat sheet for your payment allocation. So if you want to know specifically how everything's broken down in a quick and simple way, Fred has added this, which absolutely makes my life a lot easier, because I frequently get questions about, Chase, why is this payment allocated this way? And then we have to go dive in and figure out. But now we've got the direct solution there for us. So thank you.
Well, that's why I'm here, to make your life easier.
Yes.
So if you can, if I can share my screen, Chase, please.
There you go.
Let's see. So I wanted to highlight a couple of other features here. One is, and this is something we are going to be releasing probably this week, but very soon. I'm afraid it's not live yet, but it will be very soon. Two things. One, a feature we've talked about for a while, which is write down. We've also called it adjustments in the past, but enabling write down for time entries. A couple of you have beta tested this and are using it. I've used it for a while, and we're ready to release it more widely now. When this is enabled, when you go to draft invoices, sorry, I need to find some with some hours on. Sorry, I don't have good data in here. It allows you, when you edit draft invoice items, to adjust the original time or to add a write down amount, and then you end up with a billed amount over here. And this is critical for reporting purposes, so will affect certain reports, and you can do much more interesting reports around productivity if you start using this feature. So we'll announce it here shortly with a pop-up, and it should be available very shortly in your account.
If you'd like to get a head start on that, our new technical writer, Doug, actually has just finished a fantastic article on how it works, what it does, all the cool tricks. So you can check that out in the support or FAQ section of the article, the library of articles.
Right. Awesome. Sorry, I shouldn't have been in my development account here with all these funny names. Let me switch over to
hey, I didn't know you had access to this account.
The more reasonable one. All right, so the next thing I'm going to show, which is also close to being released, and is part of a much bigger picture of some changes and additions. Like, we're really beefing up our report section with new reports and new features, and ultimately also some exciting new insights and visualizations and so on that's going to come down the road. But as a starting point, what we're going to do is, you're familiar with this this way where we navigate with this left-hand report option here. And we're kind of reaching a limit in terms of how useful this way of navigating to reports are.
It's getting a little busy.
Yeah, so we're going to group the reports this way here shortly, by clients, by users, by practice areas, etc. And the same reports that you're used to will be available in here. It's not like we're removing any reports or initially adding any. So it's really just a navigation thing. But we're also adding these time period shortcuts where you can quickly drill in and look at either the current month or the previous month or year to date, so that you don't have to go in and then adjust the time period. You just click in straight into the correct time period. So this is also going to be released pretty soon. There is a little cheating shortcut here if you get confused and can't find the report. Click on this yellow box and you can then find it over here where it used to be. But we will remove that option at some point.
And while you try this out, if you have any ideas of more of those quick create options for reports, specific filter options that you or your firm frequently are using, in addition to date, maybe it's billed or not billed, maybe it's including archived or not, send us a message and let us know, hey, this is a filter we use all the time. It'd be great if we had that quick option there.
Right. And we will be adding more reports in here. Several of you have asked us to add other reports that are critical for you, and so we're going to be expanding some of the reports and giving you more options in here. So this is also fairly imminent. So I guess those were the three main things I was going to mention here: the allocation detail option on the revenue by attorney and all the revenue reports, the write-down feature that's coming, and then this report navigation and additional reports that's going to come. There's plenty of other things that we're working on, but I think that was what I was going to cover for now.
Super exciting.
Any other questions before we wrap it up?
Wrap it up, put it down. It's time to go home, Fred.
Otherwise, thank you for joining us. We'll have a recording of this. If you want to expose any of your colleagues to our ramblings, you can feel free. We're also looking for topics for our next one. We've gone I wouldn't say 360 fully. We're almost 360 through, invoicing, time tracking, expenses, trust accounting, et cetera, et cetera. There's some other topics we're thinking of, but if there's some area of the product that you feel needs a spotlight, like the one we put on expenses today, we're very open to hearing your ideas. We will have these classes monthly, so looking forward to seeing you next month on another topic. Thanks, Chase, and
thank you, Fred.
We'll see you around.